All right, welcome back. Another episode of Chart Talk. If your first time watching, we're going to go over broad markets, broad sectors, top swing ideas, and probably talk about this for a minute or two. So, jumping right into things. Again, we've been kind of talking about this the last few weeks. End of summer, very slow price action, typically into Labor Day. So we saw that the last 2 weeks. It's August. Most people are on vacation, and this tiny pullback is nothing to lose sleep over. 2% off all-time highs. Who cares? But we've seen, some of these little pullbacks, pretty much all summer. 3, 4, 5% pullback. We trade back into the range. We get to see it again. And, nothing new here. Just now we're in kind of new all-time high territory. So we eventually want to see a break of this, 780, just round up a little bit. But for now, we probably need to see this prior resistance level get shaken out and start to loosely turn into support. So we probably need to see, a move below 760 in the S&P before we eventually see a move through the high of 780. So S&P still very strong, 2% off all-time highs, nothing to lose sleep over, just kind of paint drying action until after Labor Day. For NASDAQ, again, a little bit weaker compared to the S&P. Again, these little red arrows, all-time high. Retest, again, we often see resistance being met at that first retest level. And after that forms, we're now starting to see, sellers getting a little bit more or a little less patient and creating lower highs. Not the best sign for tech compared to S&P where they're putting in, new highs. So we did see NASDAQ test support today. No real crazy break. Again, super low volatility, so shouldn't really be expecting, kind of these like bigger bearish engulfing candles like we saw early in the summertime. Again, just very low, low volatility lately. Now, the reason for that is, the reason why NASDAQ names have been much weaker than S&P names is the semiconductor sector just continues to kind of roll over when it was, the prom king, pretty much all of spring and into most of the summertime. So as the semiconductor prices kind of come back to reality, they're dragging down the NASDAQ sector, which again, we spoke about this last week, seeing money rotation, semis were the leaders. Again, middle of June is when they topped out, and middle of June to the day is when the biotechs took over and started to break out higher. So we saw that rotation, out of semis into biotechs, the secondary play being the broader sector, focused on like healthcare names. So we've just continued to see that strength. But last week, again, we had that Moderna news and caught, 170% gap up, from the day prior, caused, the biotech sector to get a little bit of ahead of itself, where it's just starting to form this little, flag up here at high. So if we zoom out a little bit, we can see, I'm going to delete some of these notes here. We can see the blue sky breakout in the biotech sector. Has a run up, starts to base out, and then it starts the next breakout stage. So there's, no path. This is the path of least resistance. This is an all-time high breakout going back nearly half a decade. Major pattern breaking out. Again, we saw this with energy also like earlier in the year. This level goes back. Let me see if I can show you on like a monthly. This energy level breakout goes back nearly, 20 years. It's kind of just getting started. Major breakout entry early in the year, still trading higher, should expect higher price action, in the, the coming years. And same thing we're seeing with biotechs, major, half a decade long setup, just starting to now break out. Expect to see, higher price action. Now, when you look at like semis, they've been doing, percentage wise, they've already gone so much so far that They've been in this breakout, run up for a decade now, and they've just gone up so much where it's getting a little, you know, 600% run up in 2 years. It's getting a little extended where, IBB, they're breaking out their all-time high there, 10, 15% above highs versus semis up 500% in those couple of years. So there are, some sectors to keep a closer eye on, just more so for like this week than looking at kind of like the macro levels. Again, consumer discretionaries been flagging out. Again, we showed these prior examples of biotechs breaking out and energy breaking out. Very textbook pattern here. Consumer discretionaries. So keeping a close eye on this breakout here. Materials, again, very similar, broad, big flag forming here. We can see the horizontal consolidation. So keeping an eye there. Financials, very strong. Stage two breakout continues to do that, continues to stay in that stage two breakout, keep holding those names. We're seeing the same thing in healthcare as well. Very clear stage two breakout. Again, these lines, we haven't touched them for months, and they continue to hold basically to the penny. They touch resistance, they pull back in, they touch support, they, ride back up. We even see the same Dow 30 names also, very clear stage two breakout. And each time, it touches resistance, it sells off. Each time it bounces off support, it just trades in that range. So, if you're looking at these very clear stage two breakouts, in Dow 30, in healthcare, you just wait for those support pull-ins, and you buy back up on the way. So again, that's a broad sector. Again, quick little summary. Expect some little weakness, expect a little shakeout through this area, the broad index. Nothing to really lose sleep over. Again, we're 2% off all-time highs. But from now until after Labor Day, it's going to be very slow price action because most people are, away for the holidays. So on my end, our buddy Jeremy called out this TIVA last week. We're still in it. Again, really want to see this break through this 38 to push through these highs to kind of get away and confirm this breakout. For now, it's still kind of just like flirting with this breakout level. So we may be a little too early, but for now, again, it's just still holding this 37 area that was resistance. That's very cutely acting as support for now. But again, we're still just giving it versus 36. And we just really want to see at some point this week a break above this 38 to confirm it's out of this like base and it's going into a breakout stage. So still relatively tight risk there. And just holding that one. Again, keeping a close eye on this XMTR. This is one of the IPO setups where we look to buy through the IPO high. So you think about SpaceX. We'll go over that in a moment. Their IPO high is in the 200s. This example is we want to buy it through the high of that IPO area. Now again, this name. This is the tech name. Took 5 years to get back to those all-time highs, and this is why the people that were rushing into SpaceX or trying to rush into it, if I spoke with them, I was always saying, like, just wait. There's no rush. There might be a few day pop in it, but it takes these names, any newer issue, years to really develop. So it's been half a decade for this XMTR. Again, we haven't been watching for 5 years. It's now back to this level. And we just want to buy through these highs, like through this 98 area. There should be a much cleaner trade to new highs once it gets above that. So keeping a close eye on this XMTR. We'll go over a couple names that have been, on our watch list for the past week or so. Again, similar example. This life trigger today, we didn't take it because the risk was a little too great based on the entry. Again, we were looking at this flag that was starting to form here at all-time highs, and we want to look for an entry through 36. Now today broke through 36, but at that time the stock was already up 6%. So yes, it's up 8% now, but would you have wanted to buy a stock that's up 6% to be up 2% now? but your risk is still three times what the current reward is. So we'll let this one go for now. Still keeping an eye on it. But again, the risk reward from the entry just wasn't there. We're not trying to risk 5 or 6% initially off the bat. This EWTX, another biotech name, we had a trade in it a few weeks ago through this 42. Again, we're talking about these IPO setups. This EWTX again came out in 2022, came out, pushed as high as around $40 a share, dropped 90% that year, went from 40 down to nearly $4. Again, this is why we avoid new issues at all costs, because if I pulled up 100 IPOs and you look at the first year trading, very often this is the result. And this is why we don't chase new issue IPOs, and especially don't touch them once they start taking out the IPO low, because it just, what you saw with SpaceX, 220 down to nearly 100, very quickly 50% drop. We don't want to be a part of that. Now, years later, 5 years later, this EWTX is now flirting with new all-time highs. So we had a little trade into that 42 a few weeks ago, but again, these aren't, that touches that level and never looks back. These trades can still take months and months to develop. So we're seeing what was resistance. This name could not break above 42. Can't break above it. Can't break above it here. Can't break above it here again. Now it starts to break above it. We see the breakout here. And now we're seeing this new mini flag forming. Now the buyers are getting, the sellers have left the party that were holding it down. And now the buyers are trying to push it up higher, but it's just not ready yet. It's still just, flagging out with what was resistance turning into support. And now, really until you get a clear break of this 48, it's going to probably just kind of chop around. So, we should expect to see this retest this 48 all-time high. And again, this could do this for weeks. But eventually, through that all-time high of 48 is when you see a move to 50 and 60 and 70 and so on and so forth. So keeping a close eye on this EWTX, but again, no crazy rush because it needs to still retest the all-time high, set up, and then push through it. So again, Amazon definitely needs a little bit of time down here. Again, we don't really want to be battling with the name as it's pulling into support. Again, there's still a huge area for this like gap to fill if it really wants to. Again, gaps do like to get filled. This is the gap area. This was, you know, this is the gap. Before earnings, gaps up. And this is kind of like the area it wants to like backfill before it can get back up through 280. Again, don't care about any of this chop in between here. We just care about whenever it gets back to 280. And when that does, we probably see a move to 400 just based on this overall range of the name. So again, not checking this every day, checking it once a week, have alerts set, and just know that that 280 breakout is the real entry. Something getting a little bit closer is this LYV. Again, this is a blue sky breakout, meaning this name is trading near its all-time high. We're looking to buy it when it gets the most expensive it's ever traded at. So we want to buy it through this 187, through this 189, through all-time highs versus, the most recent pivot low. For now, it's 180. So 2% risk here to hold it for a move higher. This Clorox started to trigger today. I remember Fortino had mentioned this one a few weeks ago. Again, we can see this area acting as resistance back in April. We can see it's still acting as resistance all the way now in August. And now it's starting to kind of flirt with breaking that level, which is a good sign. And, consumer staple name, strong, decently strong sector. Clorox, pretty low beta name overall. So keeping an eye on this 109 entry versus 104. Again, 2% risk, could conservatively find like a 10% trade in this Clorox if you hold it, versus that stop. Another pharma name, we have this KNSA, very tight earnings flag here. Again, entry through 80, another entry through 83, 82, but very tight spot here. Again, can't get above 80, can't trade below 78. It's in this $2 range. Buyers and sellers are, in this very tight kind of wrestling match, and someone is eventually going to have to push the name in one direction. So these are the times we want to look for entries because we can risk 1 or 2% and buy with if buyers are winning, we want to buy with them, buy on the way up, buy through 80 versus 78. Moving on, Fab, nothing really to talk about. This WAT, another healthcare name. Again, you might be noticing a reoccurring theme here. We're only focusing on names that are very expensive and trying to get more expensive. So this WAT puts in an all-time high back in 2021, 425. Takes 4 years to get back to that area, cannot break it. Tries it last year, can't break it again. It's back up here again. So each subsequent attempt increases the probability that the breakout eventually pushes higher. So this is a name we're keeping a very close eye on. Again, we're looking to buy that 425. The current stop right now is 395. Still initial risk is, 5, 6, 7%, but we're not going to be buying it that day versus stop. Once it gets closer, we'll have a more, defined entry and exit. Triple M isn't ready yet. FTNT, again, we're talking about these retests. FTNT puts an all-time high. Retest that area, has issues breaking that. We don't want to buy the retest. We want the third or fourth attempt, like that Watt, to break. We don't want to buy the retest. Third, fourth, fifth attempt is when we look for them. This QURE, another biotech name, pretty decent earning range here, and just waiting for this breakthrough 50 versus 46. Again, with that Amazon example, when the name gaps up huge, here is that like gap fill area. And we can see that this QRE spent like 2 or 3 weeks kind of, flirting with this area, doesn't fully fill it, but retraces, half of the move, and now it's back up there. So this is the very tough part that a lot of like newer traders will try to catch whatever bottom it is. And what ends up happening is you get close, most traders are going to try buying it here. They get pushed out this day and they end up chasing it back higher. So these are all the times where we don't want to be involved. It's, very B, C setups. And this is like the A plus setup, like buying through that high, very tight risk. It's much less of a frustrating trade than trying to, kind of catch the bottom. And that's like with Amazon, we don't want to deal with this chop in here. We just want to wait for that setup whenever that happens. We're not watching every day. When it gets there, that's when we want to keep a closer eye on it. Again, SpaceX, we mentioned, we want, through 225 in a couple of years, probably a phenomenal trade. Probably not seeing that anytime soon. This is when we want to avoid it. Takes out that stabilizing bid. We got some Instagram posts about when it was touching this 150 that we refer to as a dead zone, and it had, a very quick 50% drop since then. And now recently, again, this is definitely a name that people are keeping an eye on. If or when this name could push back north through this 150, again, this is like technically the retest area of that area, that there could be a trade at that time. For now, it's still too wide. Needs to still tighten up, probably even push lower than here. But if you need to trade SpaceX or you're looking to really buy it, wait for an entry north of 150. And then whatever that recent pivot low is, that's where you can kind of place your stuff. Moving on, we have this ENM, a little base breakout here through this 76. Again, not ready. A lot of these names, we saw some setups last week, but when the market's weak, you can't expect breakouts. So, very short watch list on my end, just kind of hang out in this TIVA markets, very low VIX, nothing really crazy going on. So not really trying to overextend myself or do too much. Members are kind of doing the same. And we'll talk about the book for a moment. Again, just want to thank everyone who's been leaving reviews, nearly 100 reviews so far. So really appreciate that. Again, if you have gotten the book and have left a review, all you have to do is scroll down. You'll see customer reviews. And right here, write customer review. You click that button, hopefully leave 5 stars. And you can share what you've found helpful from the book or your experience being a member. But really appreciate everyone who took the time to do that. Yesterday we had the most books sold since it came out. We sold like over 100 books yesterday. And again, as you can see here, Kindles for free, audiobooks for free. You know, I'm not here to make money off the book. I'm here to help new traders avoid the dumb money mistakes that most tend to make, myself included. Again, it took me, I've been trading stocks since I've been 15, 16 years old. So this book encompasses, 20 years of like the mistakes and lessons that I've learned. A lot of them are, come from just buying expensive stocks, avoiding the cheap ones, avoiding leverage, avoiding margin, saving consistently, maxing out retirement accounts. Very simple, repeatable things that any person can do with no trading knowledge. So I try to make this book as easy to read as possible. A lot of pictures. It looks like it's a thick book. It's 350 pages, but there is plenty, for like visual learners, plenty of charts in here. Read it, write it in plain English. And if you are reading the book, we do have the free Discord. You can read this book in real time and ask me questions, and I'll help you the best of my ability to answer them. So again, if you want a free copy, go on Amazon, search Big Picture Trading Dumb Money. Hopefully you get the Kindle or audiobooks, you get it for free. And hopefully you guys found some value out of this video this week. And if you've found value from it, drop a little thumbs up. And until next week, good luck and happy trading.